Okay, news is supposed to come out here in about 10 seconds. Some guy from the Fed's going to speak. And I'm in this Oanda account. I've been buying the euro as it goes up here. Euro pulled back into this cloud. So the cloud trading system, just kind of moving average. I think it's maybe a 3 or 4 period moving average simple. You just buy. If it's going up, you buy on pullbacks. The only trick there is you have to be there to pull the trigger. That's the only qualifier. Like here, I would buy this maybe. Severely oversold. This is a trend trade, so is the pound. Trend trade. So just realize I have all these limits here. I'm going to have to put this all in a giant limit grid. Pure limits, probably up to about 150 limit scripts. Okay, the news is out. And the stock market keeps going up. And this is the monthly stock market. Cloud is still in an uptrend. There was only two pullbacks here. In 2011, you could have got in on the counter trend where the cloud bot gets trapped, right? Your classic Akinashi, this is smooth Akinashi, gets trapped going the other way. And there's your, contrarian trade. Then you've got the, it just keeps going up. And I think this was the place to get in was on this, right here you could have jumped on the train. Right here where they popped its head below the cloud. There's not very many entries, actually. But that's a killer entry, right? People died on that entry. It's so killer. Definitely right there. Okay, now we're going up in the euro. And I think we're going to totally engulf. It's a very long auction. Very long auction. So the auction started on, somebody asked me about that too. The auction thing is just nothing but a stop hunt. I mean, you could call it like trap traders, fake breakouts. That's an auction. It's quite a lot of things. Very simple. There's only two things going on. Either three things. The market's going sideways and nobody's making any money. Or it's violently moving up and somebody's violently making money. Or they're just not in the market, painfully watching it go up without them. Wondering, should they get on? Is this a trend? Should I get on? Or should I place my orders at the next turnbuckle? Should I get on the reversals? So there's only a couple choices there. So let's go look at this this Oanda broker. These guys are in an uptrend, right? Now, you could pull the trigger here like blindly and trend trade that. And if you're big enough, you're loving the trade. If your stops are too tight, you're pissed off because they stopped you out. Over and over again. And of course, once you figure out the game, then you're going to try to maximize and optimize the amount of money you're making. So everybody goes through this thing where they say, if I just could do that same pattern, but then of course, here's the downside is that you would have to actually do twice the amount of work. And maybe actually get a little chopped up because the balance between under trading, the continuum between under trading and over trading. So the sweet spot would be, I'm just trading just enough. So if you only, on the 1 hour chart on 1 hour cloud here, if you only pull the trigger when the market was down, you can see already you're down to less than 24 trades a day because the market typically will not go down 24 times in a row. But what if it did? Do you have a trigger to pull for that? Now you look at this guy with the Vegas shooter. He's kind of like a sloppy scalper in a way, right? He's got the bumps. He's not precise, and he's not timing it, right? He's just using the momentum of his bot of this cheap Hackney. It was funny, they make this guy like some genius. I can't believe he did it by himself. Really? Did you ever fix a car? Apparently you've never worked on your own car. Like, what? Can I get a bellboy to bring me? I think I can get the bellboy to bring stuff up. If I tip him hard, I think he'll bring up a girl in a suitcase, right? It's got a girl in there. Some spinner in a trunk. So somebody sent me this email asking this question: how do you maximize the amount of money you're making if you're swing trading? And it really comes down to being really working twice as hard, or maybe 20% as hard. So the person's not here. I can't really ask him all the details, but they sent me a chart of the reversal points, and they had a definition of their entry criteria. They didn't really say how many tickets they were running, so I can't really say that's probably the most critical factor, because if you're running 10 buy strategies and 10 sell strategy, which I'm trying to keep my trades on the hotkeys just down because I'm forced by the nature of the keyboard. Nature of MetaTrader's kind of forced me in a way. I could have hotkeys actually that go beyond that. The keyboard only has 14, 15 rows. And I thought, well, in the lettering system, in the way that they set up, if I go with just numbers, I'm stuck with 10 buys and 10 sells. Now, this is what makes artwork, they say, is the fact that you only have, your canvas is only so big. You need to say what you need to say. This is why Twitter has the 140 character limit. You need to say what you need to say in that thing. So trade plans shouldn't be too complicated. But if you only have 10 trade plans to buy and 10 trade plans to sell, you also have this kind of forced consistency. So everything you're looking for in trading is about consistent, right? And of course, having this cash register kind of system with the hotkeys where you kind of just know, hey, if I hit this, if I get a customer that wants to, say I get a customer that's hyperactive, I know that this script works on them. When I talk to him like this, he calms them down. Now, you can't really manipulate the market, but in other words, you have to accommodate, some people are, if somebody comes in on PCP to buy a car from you, you can't really manipulate them. But you want to sell that car, and you know the way they are, that if you lay the stuff out just right, the pen's ready to sign, you're taking advantage of the fact they're irrational. So the market is irrational sometimes. Right? They say the market's always right, but the markets, when they're spiking, they're unfair value. And this is it could be a momentary situation. It could be momentary and lead to bigger and worser things. How do you know that that's, and of course the time of day matters, because as you cross the threshold, the panic ensues, and there's kind of a time squeeze. That's why if you're using these Renko charts, you're seeing smooth data, because you're not seeing price, you're not seeing frame by frame. That's a movie that goes from slow-mo to fast-mo. It's not a great representation of. It's better to watch strategy tests or playback and get used to the rhythm of the market than it is to try to compress your data to, like, if you're going to master a song, you would never send your song out for $1,000 to be compressed when you've already compressed it. It's no good to you're taking the dynamic range out of the song. There's nothing to work with. So Renko, I get the idea your brain wants to see smooth data, but it's the noise that creates the move. The cause for the effect is the noise. So the choppy ranges, whatever that time frame is. And the noise is the the connecting factor, right? Just like in the atomic world, the field around the molecules at the subatomic level is what keeps the whole structure intact. So they're saying tables are actually porous, but you can't put your hand through the table, unless you're angry enough. So the question the guy has here is about this swing trading on the 4-hour chart. Now, we go to the actual text here. Now, it's a long. Of course, there's all sorts of things to think about when you think about trading. I don't really have the complete picture here of what the guy's coming from. I'll try to answer the question in the way I'm thinking about scripts, though. So I'm approaching this from how you would actually optimize a swing strategy. And it's kind of, it really depends on your, how hard you want to work, really, typically. So here's the story. So this guy says that he finally got to the stage of turning a profit on his swing trades. And the problem is he wants to optimize. Now, he's also says here, he's using 4-hour charts and covering multiple instruments. Now, I would say right off the bat, that's typically the hardest thing to do for me. I don't think I could ever do it. I always think I can do it, and I realize I'm not that guy. Now, it's not to say there are not people that can trade multiple instruments, but I think at that terms, they're not going to scalp swing like I'm doing. So I'm scalp swinging on one instrument because I know I can take one instrument and I can really go to town on it, right? I can see the 5-minute, I can see the big breath, I can see also the other instruments. That would kind of give me a slight, like if the pound's going up, the euro's probably going to follow, right? Typical, and Australia is going to be all choppy, but I could jump on the Australian train if I thought I missed the assault on the dollar. So if you can imagine domino, you have to think so broadly and so deeply when you trade multiple instruments, right? Just like, so the focus is a problem. Because you can really go nuts on one instrument. You could literally go nuts. You could be in so heavy for 10 pips, so dynamically adjusting to that one market and see a sell and see a buy and see a scalp and see a sell scalp, see a buy scalp, and become nimble on one instrument as opposed to. Now, some people are bears, some people are bulls, and they basically scan all the instruments for a setup that can maybe head and shoulders on the top, inverted head and shoulders on the bottom, triple bottom, whatever that pattern that jumps out at you. And the idea there is that you're going to scan markets and you're going to pull the trigger on what you perceive to be your classic favorite pattern. And of course, you don't have maybe the free margin to go trade another instrument, but maybe you have allocated 3 trades per instrument, 10 pairs. So you're going to do 30 trades a day. Now, there's a possibility, and like I said, the 1-hour chart has a possibility has the potential to have 24 trades, but we know that if you're just going to pull the trigger when it's up, you're going to sell when it's up 1 hour, that you wouldn't do that, or maybe it has to be up 20 pips. Some criteria say up 20 pips, hard 1 hour, I sell at the market, and I run a 22 pip stop, and I just press the button once. Or I've already got limits up there to sell because I've come to the conclusion that the best sells are above me and the best buys are below me. As far as entry goes, that's just completely against your view of the market. It's just a price issue. But you would always know that the better prices if you owned a business, that if something goes on sale that you're going to get, if that's the same brand, you're going to get that. So if you consider each instrument to be a brand, you always know the best price is below you. So this multiple instrument thing is It's debatable. I mean, for me, I just can't get my brain around it. I cannot focus. Typically, I've never been able to have a focus broader than what's in front of me. So maybe that's, I mean, I can do it, but I'd have to set it up in a different room in the house almost, that trade. I just couldn't bear to try to scalp that, and especially if I'm on one account. Oh, I scalped out of that and that because I'm missing the subtle. I watch the tick chart because I can hear the market. In other words, I can just see the character of the tick chart. I'm like, oh yeah, that's like I was seeing in this last stream last week that it got violent, and this one guy's like, violence? I'm like, yeah. I mean, I can see that tick chart. It's just like watching, it's just you get in tune with the market. You're just like literally, oh yeah, that's a move. Like something's going on. Like it's just, especially if I have, like I said, I'm running the same instrument across 5 brokers. Right, I got 5 demos. I can see the tick chart here. I can have like a big house broker and a bucket shop broker, and people are like, the bucket shops, dude. Open a bucket shop account and fucking arbitrage against your supposedly ECN high-end broker, right? So everything's to your advantage here. I can't think of a more advantageful thing. I mean, do it while you can. Who knows what's going to happen? Trade your ass off while you can. Now, so the question here is, the problem is with swing trade is waiting for the money. Now, this is why I say scalp, but how could you scalp multiple instruments? Maybe not, maybe tough. Maybe 2. You also have to have the discipline not to jump. Scalping implies that you're on a small time frame, but you can scalp off of a 1-hour chart, right? You can see, okay, look at this, right? They just stop hunted everybody. They took out 8 hours of fucking data. Get in for the scalp, or have a scalp pending there. So you can have a pending scalp, or you could actually pull the trigger. But you can build scalp banks into the data prices, into the data, into the price. This really has nothing to do with Gartley's and all that bullshit. It's just inventory control. Your inventory, do not duplicate price, do not get standing waves. In audio, it's called standing waves, where you clash. It's like you're just cancel. It's redundancy. You don't want redundancy because a computer could do that, but you would have to, if you're painting a painting, you can't just keep hitting the same color in the same spot because it just doesn't have any, there's no diffusion. You're looking for high resolution trading, and I'm actually not paying attention to this account. So you can't trade you can't trade fiercely while talking. Your focus couldn't do it. I mean, if you're trying to make 10 grand, you really don't want people tapping on your shoulder, all that nonsense, right? So I'm just in a swing trade here. Now I could swing trade it for an hour. I could swing trade it for 8 hours. No, that's a different. They're actually a swing trade is a scalp. It's all the same thing. It's a trade, but I think when you think of swing trade, you think about reversals. Or getting into reversal, but you could counter trend trade, you could trend trade, you're still a swing trader, and your entry, the optimal trade entry, which there is not, because it's a diffused entry. In reality, it's diffused. There is no one moment that a tomato goes from green to red. It's a transitional thing. There is no, well, when's this thing going to get ripe? It's getting ripe. It's in the process. So he says here, when you're relying, so he wants more cash flow. Therefore, I've been working on produce a trade plan for breakout retest trading on slightly shorter time frames so that I can recycle my money faster. Now, I'm also going to assume that he's trying to And I can't scroll down on this. Oh God, can't get that to respond. Can't get the Google to respond to a scroll down. So it's hanging up here. So he says, now the trade plan for a breakout retest on slightly short time frames so that I can recycle money faster. I would say that sounds very strategic. And I think that unless you have a mechanical trade plan, that the structured trade plan, what if the market doesn't come back to that structure level? How can you make money in the meantime on a mechanical trade plan where literally you just go with the market? You just follow the market, follow the money, right? Conspiratorial speak, follow the money. Follow the guys that make the mercury switches. So his definition of a breakout, now here's where it gets very complicated. And we really wouldn't, here's the definition of breakout actually differs in terms of what I consider volatility breakout is the bars get smaller, but eventually there's a explosion out of a small low true range, or maybe the last three bars are small. We're forming a triangle. We have a breakout, and it could be still a fake out, but it goes on. Just goes on, plunging into uncharted water, and there's a lot of money to be made on a breakout if you cue it upright, if you cue it. If you stack if you're in the right size, you got the right stops, not one stop, but maybe multiple tickets. So here's the thing. He says, my definition of breakout is any reversal where the buyers overcome the sellers or overcome the buyers on an open and closed basis rather than the wicks. Well, okay, but you need to get in on the wicks. In other words, the wick is the edge of the market for that time period. And when I say get in on the wicks, you're either going to get in a breakout or you're going to get if you're going to get in a limit strategy, which means you're looking for a retest of a wick or a retest of a price area, you're getting in on the wicks. So it doesn't make sense, right? So do I get in a stop or a limit on a wick? Well, that depends. If it's a 4-hour wick, it's different than a 5-minute wick. So you invert the trade plan. The smaller your time frame goes. I mean, you somewhat invert that. A breakout on a 1-hour chart is, or a directional breakout. Say you're trading from one side. As the market pulls back, you're stacking up buy stops. If you think this is a pullback, you're stacking up buy stops. And some of those need to be scalps. You cannot rely on one ticket. There's no way I'll ever do it on one ticket. I would never be able to make any money on one ticket. Just like I can't make any money from one customer. I have a customer that's a 5-minute crackhead, and I have the customer that's on PCP all day long buying these cars off of me, and I don't know why, and I don't care, right? He's probably a drug dealer, but guess what? I'm not turning down his money. You don't see the banks turning down them. Did anybody see Scarface? You don't see the bank. Just the deposit fees are just higher. That's all. So then he says, if I wait, and this is the part that might be tough, if I wait for a retest, because you're waiting to get paid, if I wait for a retest of that level and enter my trade, more often than not, price will react precisely at that level within a few pips. That's odd. So, yeah, but you have to incorporate the wicks because the wicks are the price levels that are cracked through. On a 1 hour chart, 3 hours of pressure built up in one direction. It's either going to be a trap or that's going to be a place to that's really going to break out, and really is a real breakout because of the time of day and what's gone on before, and time's going up, marching on, and this really is going up. And the problem is the market can go into a drift or it can go into a serious move. I mean, seriously, quickly. So he says he's looking at the closing prices as establishing reversals taking place. But the wicks are going to be the thing that either stops you out or it limits you in. You're either trying to get limited in or stopped out. You're either going to stop out to preserve capital, or you're going to limit it in because you're so contrarian on entry that you literally got in on a market maker liquidity satisfaction. Market's satisfied itself liquidity ways, and it's getting in. So and he sees if I wait for a retest, more often than not, well, this is kind of odd sentence here, because if I wait for a retest level, more often than not, price will react, okay, precisely that level, then a few pips. Okay, so he's saying good entry there. But still to this point, I'm assuming he's just trading one or two tickets. I don't think it's a good idea, because you have to have that one ticket that only makes like 5 or 8 pips. You just have to have that in there because in the stack, because otherwise you can't survive the violence out there, right? You need to have the little Dillinger weapon, or the little, it's just 2 shots, I think, stacked, and it's just like preloaded with upper and lower barrels or something, a little chrome pearl-handled revolver, just in case, right? Or the James Bond sock gun. The buck knife. Okay, it looks like we're really going up on this euro. I'll keep buying. Heading to a winner. So the now he says he's using a 200 ATR 200. I think he means the average true range of 200. Don't ask me why. Okay, so this is a classic, and I would ask him why. And people hold on to whatever, they made money, they feel safe, whatever. They heard somebody uses it, so therefore, like the when you heard somebody was using, say, a certain kind of spice, maybe you started putting that in your food, and you're like, yeah, I don't really like that spice, but that's what the professionals, and I'm just like a professional chef for whatever reason. So don't ask me why. It seems as good as any. But I think using some kind of tool on something does make you feel safer, because you're like, well, at least I bought the whole Craftsman tool set. Therefore, when I work on the car, at least look, it's like I'm trying here, Like, think God's going to give you a break. God's looking down going, well, he is trying. Look, he bought a tool set. Let this guy win on the trade. My God, he's using so maybe you're religious. Or maybe it's just one of those, what do they call it? Superstitions. I got to use something, otherwise. And now he's saying that he has a 1-to-1 profit stop loss target. But that's probably the worst thing about his system. So unfortunately, you have to have some pretty greedy tickets in there, not all of them, or you could just, like I said, if you have enough tickets, once you do make 1-to-1, but you see they're coming after your other take profits, you could either shore up your stops, which I typically don't do. I'm too stubborn to move my stops because I think my entry is so genius that I wouldn't even touch that. Now, so everything comes down to your psychology and all this. There's a pretty complicated picture, actually, but just from the system standpoint. So his question is using, now he doesn't think it maximizes returns to be at that 1-to-1 ratio. Now I would say not, because you have to be so fucking good at trading that you probably couldn't sustain that amount of without some blue pills, you can never sustain that amount of performance. So his question is using a Eurodollar example, the ATR 200 is about 15 pips. So at that level, he says, catch up occasionally. So this is the problem here. The devil's in the details. So the retest level up to 15 pips past, I'd like to set up a bank of orders which would catch the occasional runner and produce some kind of return. The reactions are less than expected. Well, you could place those by hand in front of the market as it's dropping. You could anticipate a plunge, and this is where you could add to your initial manual position. You could add these scripts. So you explain in your demo trading is for boredom. Yeah, it's for boredom, experimentation, and all that stuff. He says, I'm fairly sure you don't use quite the same scattergun approach on live accounts. I'm wondering if you had any kind of formula you apply to which you share and to what direction the answer I'm looking for. Without it, I suspect many weeks of trial and error to come up with something that works. Yeah, well, the thing is that I guess that I'm doing it since I'm only trading the Eurodollar. I can go to sleep, pretty much go to sleep knowing that if I put a buy limit down here for 8 hours, that I will possibly get filled. And if I look at the top, become a bottom here. Now, so last night, I suspected we were going to retest here on this double top into the cloud, whatever have you. And so, or I'm going to buy any pullback on the hour. I would just press the button. I just buy. And so I have a buy at the market ticket that's 20 pips stop to make like 50 pips. Now, if the market really takes off, I can scooch up my, but I also have the limit stuff trailing behind. Now, here's a 4-hour limit. So if this was, say, for 4 hours, I would trail this 2K 6 pips apart, right? Now, it just comes down to saying, well, you know what? Here's a 3-hour, and this is a 5K. Now, look at this ticket here. If the news came out, this is 64 pip range. I'm going to put a 5K in. 64 pip range for 3 hours. There's no fucking way it's dropping 64 pips in 3 hours. It's almost unfillable, but if it did, can you only imagine? Now, if you put it on a daily chart, you'd say, let's see. 64 pips in 3 hours down here? Maybe not. How about on the 30-minute chart? Maybe it's going to be like, I'll give it 4 hours to drop wherever I place this. But it's like, okay, I'm not going to duplicate that ticket. So these are all 2Ks. 22 pips stop, 16 pips stop to make 22 pips. 4 hours. Here's insane. This is 4K spread across 70 pips. There's no way. If the news came out, there's a 100 pip stop all day long, though. See, these are daily orders. I think these are all actual. These are real orders I wrote. This might be. See, but I don't know if I uploaded that. It's waiting forever for the editor to come up here. Let's see if this really is what it is. I wrote so many versions of these scripts. Now, on one instrument, now maybe you could trade multiple instruments with this ticket because you're buying 40, 60, 70 away from the cursor drop, or that's how many pips apart. So this really is all day long, and I don't think the comments reflect that, though. There's no... See, it says 1 hour. You'd have to edit all those comments, which I'm not up for that. So you just turn the comments off, try to make money, but that's all I can think of because really, I could go to the same thing here, but then when I look at this instrument, to be honest with you, I have to get my brain around this instrument, and I don't have anything left. My brain, I can look at this view, right? These are all limits. I could throw limit grids up here and go, you know what? I'm not going to be here tonight, but if we come up here, I know I want to sell. I can tell. I almost guarantee you that I want to be a seller. Here comes the euro. I want to be a seller up here all day long. I can go to the daily. See now these. So if he's saying here the scattergun approach, if I do the math on this, and I'm doing it on the demo because yeah, I'm not going to sit here. I don't know how much money this really costs me, and I'm not going to sit down and figure it out because I don't trade multiple pairs. But you can see right here all day long. This looks like a good idea to sell up here, right? If this isn't a downtrend, I want to catch it if it spikes up. So I would put these orders in like this, right? See, and what if they only last 2 hours? A lot less fear, right? If this lasts 2 hours, I'm trying to time the entry too. I'm timing the market, really. 2 hours. 2 hours. Look at this. 12 pips stops for 2 hours. They probably can't chase me down. Right? I'm saying I'm going to sell right up here. They're coming after me. Now, if I did all this stuff, I might make money at the end of the week. I'm actually down about $2,000 here or something. I might make a bunch of money today on that trade plan. Selling up here all day long, tonight, tomorrow. And if I'm really lazy, I would just go to the weekly tickets. I think weekly's in here. Here's a 3K, 40 pips for a week. Now this is, if I was going to load this whole thing up and you'd say, oh, look at that. That 10 pips stop, make 30 pips. That was fucking genius. All week you had that order up there? Yep, all week. In other words, what if we come up here? We're in a buy, right? We're in the cloud. We're in a buy. Pound against CAD's a buy. I'll just throw sell limits up here like a goober fuck. What do I care? If I do the math, right? There's enough money in the account. I'm up 190 right now. I could cash out all of my winners and still have enough money left over for this. But no, I typically don't. I mean, you have to have some thinking, some kind of thinking going. And how long do these orders last? This is a 30 pip stop to make 90 pips. I don't know. I must have been. I wrote all these weeklies, right? Now, to prove it's to prove that it works too. Here's 15 pips stop all day. Here, I'll start selling tonight. We come into Asia. The week just started too. Right, the week's just starting. Okay, so I hope that helps.